The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
A very warm welcome to this Tuesday edition of Squawk Europe. I'm Steve Sedgwick with Ben Boulos, and Charlotte on the sidelines of the G7 summit in France. These are your headlines.
US President Donald Trump arrives at the G7 summit here in France, touting a win, saying the peace framework with Iran has been signed, extending the ceasefire deal by 60 days and reopening the Strait of Hormuz.
The strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out. Now on Friday it'll be completely open.
Attention at the G7 turning to Ukraine, with Volodymyr Zelensky set to meet leaders in the next hour as the country kicks off EU membership talks. We're going to speak to Ukraine's former Foreign Minister Dmytro Kuleba at 8:45 London time.
The Bank of Japan lifts its benchmark rate to more than a three-decade high of 1% as it continues to normalise monetary policy and align with other central banks to try to combat inflation. And hopes of a lasting Middle East peace agreement spark a rally on Wall Street, with the Nasdaq, look at that, climbing 3% on Monday, while SpaceX shares add another 20%.
Right, President Donald Trump says a memorandum of understanding to end the conflict with Iran has been signed, with a formal ceremony to take place Friday in Geneva. Trump made the comments after touching down in France for a G7 meeting. The details of the document have not yet been released. Iran's president hailed the agreement as a, quote, important step towards stopping the war and beginning negotiations, but stressed that a final agreement has yet to be struck. Sitting alongside France's Emmanuel Macron, Trump hailed the deal with Tehran.
The strait is already partially opened. As you know, they're doing a little hunting for a couple of mines that they've already found. But it's essentially ships are starting to go out. Now on Friday it'll be completely open. We got along very well with Iran. It's a different set of leaders. As you know, the first set is gone, the second set is gone. And we found the third set to be very smart, strong, very smart, but we ended up making a deal.
So let's get to Charlotte on the sidelines of the G7 meeting. Charlotte looks fantastic down there, but let us not kid ourselves. As we've seen with the Japanese having to raise rates today, the world is living with the ramifications of this war and will continue to do so for a long time, whether it's the BOJ, the ECB, Bank of England, or indeed the Fed. We have higher inflation, we have higher oil prices. And for those who think this is all over, $80 a barrel for WTI is around about $20 plus higher than we were before the drumbeat of war started at the tail end of last year. Charlotte, how critical are the G6 going to be towards the US president, or do you think they're going to actually just brush aside some of those key differences?
Well, it looks like from what we heard from President Macron yesterday, that, it was positive, that maybe this is the beginning of the end, that, while there might be the ramification, the impact of the conflict with Iran will last for a while, that maybe, there will be something better at the end of the line. And President Macron last night saying, this is an important step towards peace. But here again, they're waiting to hear from the details because, they don't know anything about this MOU. So certainly the other 6 leaders in the G7 will want to hear from President Trump what this means in terms of sanctions, in terms of the nuclear program, in terms of Lebanon as well. So they wanted to hear more details from President Trump. That will be, of course, what will be happening for the next couple of days. President Macron, again, yesterday, saying that France and its allies are, standing ready to help secure the Strait of Hormuz. We know in demining, France particularly has an expertise there. And that was, in a sense, some of the key messages that we heard yesterday from some European leaders.
It's a very important one because first it will fix the nuclear issue. and it's a very important matter for peace for the whole world. And it will reopen Hormuz. It will provide peace in Lebanon, and so we are ready to take our fair share of the burden and be part of the commitment of the international community in order to support this deal.
I do hope that this will put an end to a very costly war and that it will allow the full reopening of the Strait of Hormuz with freedom of navigation, and that it will also restore or lead to full sovereignty for Lebanon. The EU is prepared to contribute to putting together an entire solid framework for lasting peace in the Middle East.
The principle of sanctions is that we need real change on the ground before we can think about lifting them. Sanctions are in place to change behavior. So if behavior is changing credibly and verifiably, then you can lift sanctions. But the other way around is also true. As long as there is no behavioral change, you cannot lift the sanctions.
Now, leaders from the Middle East will be joining the G7 leaders in Evian. That's including Egypt, Qatar, UAE and Saudi. Some of them will also have bilaterals with President Trump in the run-up to this lunch. So, they're hoping here at the G7 to get more details, having all these partners, all these voices on board to try and get a better sense of what this MOU might be. And while this has been taking, of course, a lot of attention because of the weekend news, President Macron is also adamant that Ukraine should stay at top of mind of the G7 leaders. That's why President Zelensky himself will be joining the G7 this morning to talk about Ukraine. The US has had their attention very much diverted from Ukraine over the past couple of months. They try to bring back the attention here. A lot of European leaders believing that the momentum might be back on the Ukraine side, deeper and deeper strikes with drones into Russia, the Russian economy being impacted as well. So they see that maybe now is the right window of opportunity to bring Ukraine and Russia around the table for potential peace negotiations. Now, over the weekend, President Trump said he spoke both to Zelensky and Putin, and he said that maybe something can be done. So we'll have to wait and see what that means. We know that European leaders, now that they are the main supporters of Ukraine financially and economically and militarily, they want to have a voice in these negotiations, and they see that what was agreed in Alaska last year between President Putin and President Trump was not the best terms for Ukraine. So they want to see maybe a revision around some of the terms around this. So all this is at stake this morning. President Zelensky said he has offered President Trump to meet President Putin as well to have a talk around potential peace talks. So very important talks this morning. Some Europeans say, look, maybe President Trump being distracted from Ukraine over the past couple of months, maybe it was a good thing. So we have to wait and see how the terms that we can have on renegotiating there. And a lot of other topics, of course, will come later on. Is it G7, global imbalances, and tech tomorrow, and AI. Some AI leaders will be at a lunch tomorrow here meeting G7 leaders as well. So a huge amount of topics, a huge agenda here for the G7 leaders. Macron hoping they can keep President Trump throughout the whole summit. Remember last year he left halfway through in Canada. President Macron hoping President Trump will stay for the whole length, including inviting him for dinner in Versailles on Wednesday evening for the celebration of the 250th anniversary of the USA. So we'll have to wait and see in what mood President Trump is attending this G7 summit.
Charlotte, it was only 24 hours ago we were talking about 100% tariffs on wine as well, and I don't know what the wine's like down in Publier. And I also don't know what the French for bonhomie is, but I'm sure keeping the it was a joke, by the way. Just keeping the bonhomie with Trump is going to be very difficult with that kind of threat. And surely Macron must be bristling at those threats of yet more tariffs.
And that was the key reminder there that, the mild things might be getting better on some fronts. The next battle might see on the horizon. These comments on tariffs, President Trump asking for France to drop the EU digital tax, to drop the tech digital tax, otherwise threatening 100% on tariffs on French wine. The next battle is always around the corner, and that is the key there. We know that President Macron has been working throughout his 2 mandates to kind of appease and play a nice game with President Trump. Sometimes it has worked, sometimes it hasn't. So again, we know they're tiptoeing. There's been a lot of effort. They moved the date of G7 to accommodate the birthday celebration over the weekend of President Trump in Washington. They moved the dates a little bit to accommodate that. They're bringing this dinner in Versailles on Wednesday. So a lot has been done to keep President Trump on board. Despite some of these threats, some observers say we shouldn't do all this to accommodate President Trump, given the ongoing threats on multiple fronts that he's doing towards towards France and towards Europe. But certainly we see that President Macron, this is his very final G7. He's had two G7 during his two mandates. And this is a little bit his legacy, part of his legacy. You know, all his foreign policy, domestically he's had some issues, but the foreign policy has been key for President Macron, and he's leaving in less than a year. So this G7 is very much part of his legacy.
And have you tried the local Vin de Savoie Cru Marin, which is a crisp, light and dry white wine made exclusively in the Chasselas grapes, and the vineyards overlook the Dranse River on the shores of Lake Geneva? That is the local wine?
Unfortunately not, but thankfully here you have some very nice water coming from the mountains. We're in Evian, so you know we have that.
How boring. Okay. Evian it is then. Lovely. Thank you very much indeed for that. Let us move on. Ukrainian President Volodymyr Zelensky, as Charlotte was mentioning, set to meet with the G7 leaders today, attending a special morning session of the summit on Ukraine, with a session on Iran to follow later in the day. European leaders are expected to be keen to remind President Trump of the importance of peace on Kyiv's terms and not accepting concessions to Russia. On a programming note, we're going to be speaking to Ukraine's former Foreign Minister, Dmytro Kuleba, at 8:45 London time.
With details of the US-Iran Memorandum of Understanding yet to be made public, both countries are trying to frame the deal as a win, touting transit through the Strait of Hormuz and an end to the war in Lebanon. US President Donald Trump, though, has pushed back on multiple reports suggesting the White House is considering a $300 billion investment fund for Iran if a final deal to end the war, including a nuclear agreement, is reached. Dan joins us now. Dan, goodness, the twists and the turns. It feels like with this, there is claim and counterclaim. It's very hard to get a clear sense of what exactly is in this MOU, even though the US is saying that it has already been digitally signed.
That's exactly right, Ben. And the devil is going to be in the details. This week, Washington trying to turn this fragile ceasefire with Iran into a lasting deal. But the key thing for investors right now is the fact that we still haven't seen the text of this agreement. Vice President J.D. Vance telling CNBC that this deal basically has two core objectives. The first is a long-term, toll-free reopening of the Strait of Hormuz, and the other is a guarantee that Iran never develops a nuclear weapon. Here's part of what he told Squawk Box earlier.
We fundamentally have all the cards here. We don't have to give the Iranians anything if they don't make the commitments that we want long-term on the nuclear program. And even if we just stopped here, what would be true? Their military is destroyed, the Straits of Hormuz are open, their nuclear program has been destroyed, and we have incredible economic leverage over them that we didn't have a year and a half ago.
The vice president there. Meanwhile, another senior US official also telling CNBC that President Trump, J.D. Vance and the Iranian parliamentary speaker Mohammad Ghalibaf have already signed this MOU. They're now expected to show up at a formal ceremony expected in Geneva on Friday. But this is really just the start of this negotiation. Iran has reportedly agreed in principle to eliminate its stockpile of highly enriched uranium. What's not clear right now is how. The inspection regime hasn't been finalized. The timeline hasn't been finalized, and the sanctions relief package also hasn't been finalized. In fact, the Financial Times also reports today that the Trump administration has been discussing a potential $300 billion investment fund for Iran as part of this final settlement. Now, this idea, according to the FT, would be to open the door to private investment if Tehran complies with the agreement and a long-term nuclear deal is reached. Now, as you just flagged, President Trump pushing back hard on that, saying on Truth Social it was fake news. So the deal isn't signed yet. We don't have the text. And of course, 5 days is still a really long time in Middle East politics. Even if Friday's ceremony does go ahead, the hardest questions still have to be answered here. For the market, that is, of course, what happens with the Strait of Hormuz, first and foremost. Kepler estimating that traffic through the strait could recover to nearly half of pre-war levels within a month or so if this deal holds. But the real question isn't whether the waterway reopens. I think that's ultimately going to be a given. It's whether ship owners, insurers, the energy companies themselves are actually going to be prepared to come back. And in answer to that question, it looks like it's going to take more time. So all eyes are on exactly what's inside this text and who shows up on Friday to sign off on it.
OK, Dan, thank you very much. We'll speak again very soon, no doubt. Still to come on the show, the Bank of Japan hikes rates to the highest level in more than 30 years. We will break down the decision. Plus, the CEO of Qualcomm tells CNBC that memory chip shortages will ease ahead of many estimates. We'll bring you more from Arjun's conversation. And with Ukraine on the agenda as G7 leaders gather in Evian, we'll speak to Kyiv's former foreign minister. That's at 8:45 London time.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's the CEO of the London Stock Exchange Group, Julia Hoggett.
There is no justification whatsoever for not doing the right thing, even if the right thing is hard to do. Which also means that if the context changes or the information changes, it is absolutely fine to also change your mind.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this.
Welcome back. Let's have a look at how the markets are doing. And that talk of a potential deal between the US and Iran helped bring the price of oil down, both Brent crude and US crude, by almost 5% in the Monday session, settling close to $80 a barrel. That really giving some upward momentum to equities. The Dow hitting an intraday high and a fresh record closing high, also propelling the Nasdaq up at 3%. It was tech that was the outperformer in terms of the sectors in the Monday trading session. Tech up almost 3.5%. Energy, unsurprisingly, the big faller on Wall Street on the Monday trading day, down by more than 3.5%. Let's see how things are playing out in the Asian trading session this Tuesday, and a bit more of a mixed picture. Interestingly, on the Kospi, which is up more than 2%, it is defence stocks that are leading the way, perhaps looking ahead to possible opportunities for reconstruction contracts if and when that deal is finalised. We've been hearing from the US side that the deal has been electronically signed ahead of the formal signing ceremony due to happen in Switzerland on Friday, but still so many questions around that, including the logistics of getting the Strait of Hormuz fully reopened to normal traffic. Let's have a look at what's being anticipated when European trading gets underway, and a fairly flat open being called, according to the futures. This after a Monday session in which the Stock 600, the Pan-European index, closed up almost 1/5%. Most of the regional bourses closing Monday higher, except for the FTSE 100, which fell in line with the oil price, closing down 0.4%. But let's see how things pan out. We're still about 40 minutes away from the start of trading, which will bring you, as always, at the open. Steve.
The Bank of Japan has hiked its short-term interest rate target to 1%, its highest level in over 3 decades, in a move which was widely expected by economists. Cowrie joins us with more. Cowrie, is the BOJ now ahead of the curve or behind the curve, or how do people look at the inflation versus interest rate debate in Tokyo?
Well, if you take a look at the outright inflation numbers like CPI and so forth, a lot of people might argue that it's behind the curve. But I think this, the fact that whether or not this energy-related push higher is transient or not is $1 million question. And I think no one really has the answer to that, especially because we don't know, really when this preliminary agreement between the U.S. and Iran is going to materialize and what's going to come out of that in terms of the detail. I think, though, even though the Bank of Japan's decision today to raise interest rates to 1% was a done deal for the markets, I do feel like it's a milestone in many ways, not just because it's the first since 1995, but because there are a lot of other firsts going on in Japan right now. I mean, look at the equity market. The equity market briefly poked above 70,000 yen. I mean, I don't know if anyone really expected that to happen so quickly, but given the fresh tailwind that we have from the SOX overnight, that's what happened. The other unknown quantity today is what's going to happen in 15 minutes' time. This is when traditionally the Bank of Japan governor would give the news conference, but as you know, he's out sick, so one of his deputies will be stepping in his absence. Now, we haven't heard from him either in about 6 months because he too has been hospitalized and he hasn't given any public statement. So I think there is a little bit of nervousness about that, particularly for the Forex market, because when you recall when the Bank of Japan last raised rates in December last year, the governor didn't really give a lot of guidance on whether this tightening cycle would continue. And that kind of pushed the dollar yen even further. And I think there is a little bit of fear or concern in the dollar yen market that we might see a similar move. I think the other issue that happened today, you probably know that the Bank of Japan is going to pause its bond tapering program. I think this is also a milestone in itself because it's been in place since April of 2024. And so basically they're going to reduce the bond purchases by $200 billion a quarter until the end of the first quarter of next year. And then after that, they'll keep buying about 2 trillion yen worth. And in the statement, they say, look, if the market conditions are volatile, they need to step in, they will, addressing the fact that JGB yields are already close to 30-year highs as well. So yes, although the hike itself, I think, was very much expected, I think the fact that the yen is still weak and that it's putting a lot of imported inflationary pressure onto Japan, it does feel like a milestone. And a lot of the economists we've been speaking to today say, this could be the first of another hike, possibly by the end of the year, another 25 basis points. And we are closing in on what they call the terminal rate, right?
Well, let's hope so. Thank you very much indeed for that, and lovely coverage as ever. Let's get to Paul Donovan, Chief Economist at UBS GWM. Paul, really simple question. Are the Japanese and others behind the curve? I mean, when I look at the shunto this time around, the wage round, the supposed second round effects of when it gets into wages, it was, I think, third year in a row it was above 5%, coming in 5.26% as well. An interest rate of 1% and a shunto of 5.3% says they've got a problem.
So I don't think Japan is behind the curve. I think Japan is aiming for a neutral policy. This rate increase is getting it to a neutral policy. Remember, Japan started this year with, I think, an accommodative monetary policy. And so with this shift, you're moving towards a neutral policy, which is appropriate. Unlike the ECB, where the policy error was that they raised rates from a neutral rate to a very mildly restrictive rate when it's unnecessary and going to have absolutely zero effect on inflation expectations. What's happening in Japan, I think, is appropriate. We've got to remember inflation in Japan is still very subdued. Now, a chunk of that is because of government-controlled prices, and they also were providing some subsidies for oil early on in the war. So it's not entirely market forces that are keeping inflation subdued, but actually the underlying inflation is not showing outrageous effects at any point at the moment.
Why haven't we had higher inflation on the back of the tariff regime, which is oscillating all the time? Why haven't we had higher inflation on the back of two major wars involving pretty much all the major oil players, if you think about the other nations in the Middle East as well? Why has it been so subdued, and do you expect it to remain so?
Well, with regards to the tariffs, obviously that was a US problem, and there was an inflation impact. The Federal Reserve estimates it's somewhere between 0.8 and 1 percentage points added to US inflation as a consequence of last year's tariffs. Now, that's all you're likely to get from that because the problem is when you see something and it says made in China, you think, well, China's getting all of my money. Well, no, China's getting maybe 25 to 40% of your money. Most of what you pay for when you buy imported goods is domestic labour costs, which are subject to tariff. It's the retailer's costs, the wholesale costs, and so on. With the oil price, again, I think there is still sort of a mentality stuck back in the early 1970s, back when you were a young man.
Yeah, exactly, yes.
That you're seeing this pattern of oil is major.
In the early 70s. It wasn't even a slight, it was a fact.
So the issue here, of course, is that oil is just less important than it has been. And then what we've had, and markets always forget this, people adapt in the face of a crisis. So China did significantly cut its oil imports. We have seen the US Strategic Petroleum Reserve drained to an over 40-year low. People have been adapting, and making do, changing their behaviour. And so that has also limited the damage.
Paul, I suppose the difficulty for central banks this week is the basis on which their projections for what's already baked in terms of inflation. Because what happens between now and Friday and whether a deal is done, and that includes the Strait of Hormuz fully reopening, goodness knows what the situation is with mines that have been laid and so on, and any sort of logistics involved. But there is the danger, isn't there, I suppose, that even as things stand, there could be further inflationary effects, but the banks can't say for certain at the moment.
Yeah. So, I mean, this is it. The central banks should not be reacting to the oil price and to speculation about the oil price. And it's, I think, very unlikely the oil price is going to return to pre-war levels anytime soon. So there is going to be a one-off price shock which will last for about a year, typically speaking. The question of second-round effects, this is where, to Steve's point around the shunto, where do the wage price pressures emerge? And the thing is that, across most developed economies, wage growth was slowing in advance of this. So we're not seeing wage price pressures develop particularly. The other risk is profit-led inflation, where you get margin expansion along the supply chains using oil as a convenient excuse. But again, in a very politically charged environment around inflation, I think that is less likely. It is possible, but it's less likely. But again, we're not seeing evidence of this so far. The inflation numbers, the core inflation numbers, service sector inflation across the major economies isn't showing that. So I don't think you've got sort of a smoking gun that is going to lead to central banks saying, no, we've got second round effects. This is why the ECB's move was such a patent error, because there are no second round effects, and they're raising rates because, frankly, the Bundesbank's reaction to anything that goes on in the world is let's raise rates, that's always a solution. So that's why we've had that problem.
I suppose this week, as well as the actual decision from the FOMC, given that it's Kevin Walsh's first meeting in the job as the new chair, a lot will be, I suppose, watched in terms of his language and what people can read between the lines, especially if he's going to scale back the sort of forward guidance detail that the central bank gives. What will you be looking for in terms of what he says and how he says it?
So I am going to perhaps pay less attention to the Fed chair and more attention to the statement and the comments that come out after the blackout period when other members of the Fed are going to be speaking. Because already over the last couple of years, the Fed has been speaking with a more and more British accent. It's sounding a lot more like the Bank of England. You're getting a lot more dissent and argument and so on, which you don't normally get within the Fed. And given Walsh's reputation within the Fed, I think his ability to exert authority and control and lead from the front is weakened, and perceptions of political interference may compromise that further. So I think actually it's going to be the extent to which there is disagreement within the Fed that is going to be an important focus.
Which is absolutely fascinating. That British accent, let's talk a bit more about it, and the gilt market, which trades at a 1.1% premium to BTPs, which is quite extraordinary given the history of the two countries as well. We have a Makerfield by-election upon us as well, and which let's go down a set of decisions. I don't know who's going to win. It could be Reform, it could be Labour. But if Labour win, it's Andy Burnham. Andy Burnham will almost immediately launch a leadership challenge. Again, I'm going down a few permutations here. If he were to become the next Prime Minister, which is a not unlikely scenario, should we be more circumspect and concerned about the gilt market?
I don't think so. I don't think he's going to change fiscal policy particularly. And you're quite right, of course, in nominal terms, the gilt market is trading with a premium. But actually, a lot of that's just reflecting the inflation differential that exists and expectations about currency moves and so on. So in actual fact, the UK market is not trading out of line with the developed economy peers, nor should it. I mean, the debt ratio in the UK is relatively low by OECD standards, and the deficit is more or less manageable. What you've got, I think, is periodic speculation about, somebody new's coming in, so they're going to sort of, blow open the fiscal spending. Again, I think that is unlikely. You may see some cosmetic changes. You may see possibly defence spending gets taken out of some of the constraints on fiscal spending. But frankly, I think that's going to happen anyway at some point just because of the nature of the global situation. So I don't think a change of leadership is actually going to change much of substance when it comes to the big macroeconomic numbers on the UK's fiscal position.
Great. Paul, always learn something. Thank you very much indeed for that.
Thank you.
Paul, who is also a fairly young man in the 1970s. You were, weren't you?
I was.
You were around, weren't you?
I was.
I'm not that much older than you. Paul, you on the other hand.
I'm saying nothing. I am maintaining a diplomatic
You look
silence.
younger than you are.
I look younger. Oh, what? That's a...
Paul Donovan, Chief Economist at UBS and
and
GWM. It's true, it's true.